There it is. What's going on, guys? Good evening. All right. I want to run through. Going to run through my kind of master watch list right now. A lot of this crap is, essentially just that. But we'll see. We'll see. This is going to be kind of the list that I'm scanning throughout the day. But I actually wanted to come out and make a video and kind of highlight this ALM. I'm no idea what it's gonna do. If it's gonna fall through or not for me. Excuse me. But just really wanted to highlight this. So I'm gonna start just from scratch. This is a newer IPO stock. This is one of the industrial metals and mining. I think they do tungsten. Not exactly sure what that is. Just know that it's a metal and mining stock that has made 150% move out of its IPO base last fall, and has since been kind of just chilling around. And this is a stock that's been on my radar for really the past 2 weeks here, following this nice move up and consolidation. Just one of the ones that I'm kind of watching, and then seeing how it kind of builds out against this $8, $8.50 mark. Did not take this trade today, unfortunately. I was watching some of the things like USAR right after this, these hammers and holds of this $16 level in the 20 May. And this is kind of one of those similar trades. But I want to highlight, again, two things on this that, I've noticed around all of these setups. So, this is classic, kind of building around the 20 May, right, holding consolidation. The reason that this is very reasonable and a viable trade is because there's a reason for it to be on our radar with, gapping down and all the Greenland stuff going on, and a discussion over, critical minerals and, with MP, USAR, CRML, all that stuff being on the watch list this weekend and this morning. So this is deserved of a spot, right? And that's kind of the first criteria of kind of analyzing a move in the market is, would this have been on my radar, right? Would this have fit within my, preparation process, right? And it certainly checks that box. I actually posted this chart a few times last week with these hammers or lower wicks on Wednesday and Thursday. Anywho, we get this inside day right here below the 20 May, and again we gap down under the moving averages, and then we immediately go red to green. And I want to shift your attention now to the right side of my screen here at this hourly. It looks a lot cleaner here on this red to green move, and I'm just going to highlight. Right, this is the opening hourly candle right here, and we immediately go red to green. I like to use hourly moving averages, and this 50 SMA, I love when there's a launch pad essentially on the hourly chart, right? When I get the daily signal to line up, and then I get this hourly launch pad, and that's exactly what we have right here, right? We've got the 90 SMA, which is in green. We've got the 20 SMA, which is in pink, and we've got the 50 SMA. Again, there's an hourly time frame, all stacked up here as a launch pad. And then let's say this hourly moves kind of goes and brings some excitement here, and that's a fairly substantial move, right? If you look at this from the low to the hourly high, it's about a 12% move. We saw a number of smaller mid cap thematic names make some of those big moves red to green. And then this is where I really want to highlight this. And I take a lot of entries, again, based off the hourly chart that align with the daily chart kind of after they've proven themselves with, this go signal with this red to green here. And, I'm just going to simply highlight this hourly candle right here at that 9, 20, and 50 SMA. And, your tactic on this is really quite simple, is you get that launch pad, and that defines our risk, right? That lower wick of this candle defines our risk at any point during this, okay? So you can buy this, down here as it's starting to hold. You can buy it as we reclaim the previous low. You can wait for the hourly candle to close as a hammer, or you can wait for the next getting the green candle to hold and breaking the previous candle high. So let's go based off that scenario where you get this candle to hold, and then you break the previous candle high. So this would essentially be your risk on this hourly candle right here, or on this trade, based on this daily chart, right? Based on the bullish engulfing, based on this pattern here, based on the theme and the undercut of this range, and quickly getting snatched up and bought up. Here is your entry, right? Would be over the previous candle high 916, and your stop is 915, and your stop is below that hourly candle low 895. So you're risking very little, 20 cents on this trade. And by the close, right, this closed at 944. So I'm just kind of doing this to show the math and statistics of this. And let's just say you end up closing this at the end of the day. This is something that with that strong close that I would obviously swing, right? But even just right there with 944 close, you're up on this trade already 30 cents. Okay, with 20 cents of your risk, you're already up 1.5 to 1 risk to reward on the trade at the close. Okay, so then let's say we end up pushing on this even further. My kind of measurement would be to this recent high that it just had earlier in the year, right around $10, right? 966 would kind of be the first area that I'd look to, not like a target or anything. I would just kind of look to measure against. And we end up pushing 996 tomorrow, right? Immediately you're up then 80 cents on this trade, again with 20 cents of risk. You're up 4 to 1 risk to reward the next day if this works out. And I'm not speaking in hypotheticals like if this works out, because a lot of these end up seeing that sort of follow through. And it all kind of starts again with this theme. First off, why is it on my radar? With this consolidation, with this undercut and go signal, and then the first higher low on the hourly. And I'm going to detail again another trade that I took off this essentially the same exact pattern earlier in the year. Actually, it was in December at the end of last year, and ended up being a phenomenal trade for me. So I'm going to go to Eli Lilly, and this is right here in this range. Okay. So you can see, the stock first off made a fantastic run. We're going to zoom out and kind of break down why this is on our radar. Failed to break down out of this, kind of hypothetical stage 3 top right here, and then immediately reclaimed within that, put in a higher low, blasted through the 200-day moving average. This is kind of when Lilly got on my radar once we reclaimed the 200-day moving average. And I was watching it, and this flag right here was never able to get involved. Technically I should have bought this candle right here. Anyways, we go on to make really very nice run on this of about 30%, and then we're drifting in again, undercut the 20 MA here, get a nice candle to hold, remount, and we're building out this range over about 1,010. Okay, so that's a reason it's on our radar, right? Made a phenomenal move, pulling back in, undercutting the moving averages. And then again, I want to shift you over to this hourly chart here on the right, which gives that exact kind of same sort of look. First off, this kind of gaps down on this, gaps up and goes green to red at the open, ends up quickly recovering and pushing back up out of this base. That really caught my attention that day, and I was watching this as it consolidated and flagged out into all of those moving averages. And this is a trade that I simply, again, saw the 9, the 20, the 50, the 9, the 20, the 50 on the hourly all stacked up here, this flag, and was looking for simply a candle price action to give me an area to risk against. And I ended up buying this at 1013, right over this previous candle high, right? So right over this 1 hourly high. I'm just going to kind of build that out. I bought it on this candle right there, and my stop was this candle low, which was 10.0350. So on this, I was risking $10 per share on again the same exact hourly higher low, based on a daily higher low and remount of the moving averages. this stock went on to push and grind up. I ended up selling this around 1077, I think, into strength one of these days. But this is right here at 1077 on $10 of risk and a 1013 entry. I'm up $64 on the trade with $10 of risk. 6.4 to 1 risk to reward on this. 6.4 to 1 risk to reward. That means if I take a 1R loss, right? If I'm losing $10 on this trade per share, and that equals, let's just say 0.5% of my account, right? And I take 1 loss, 2 loss, 3 loss, 4 loss, 5 loss, 6 losses, then I take this Eli Lilly trade, right? So I've taken 7 trades. One of them is Eli Lilly for 6.4 to 1 risk reward, and then those other 6 losses. I am now green on my account. My equity curve is up 0.4 risk units, right? Whatever dollar number or percentage that risk unit is. So this is just kind of the first off, detailing this, specific setup and kind of build out and structure on the hourly chart. That something that stood out to me today on this ALM, and just a little bit of additional mathematics and statistics of trading and how to look at that. I'm not going to go into any watch lists or anything today. We'll go over some things in pre-market. My suspicion is honestly that we're probably going to gap up like a little bit, maybe even like a decent bit, 0.3 to 0.5%, and it's just going to be a little bit tricky. Obviously, the market had a little bit of a dump ski today on SPY and the Qs and all that. So we'll see. Yeah, kind of taking it easy, just riding some of my positions from earlier in the year, towards the end of last year. PL being one of them, Fly being one of them, Irene. What else do I got? I don't have my broker open. So, but yeah, see you guys tomorrow.